Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Bodal chemicals. Will it become multi-bagger going forward or is it an avoid? So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position into any share that I talk about should do that with their due diligence, and I am not in favor or against any company that I talk about. Before I talk about both the chemicals, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions on a daily basis. And once you get the $10 membership, you will have access to my portfolio watch list and ask questions daily. Plus, you'll have access to podcasts that I put up every now and then. For detailed market or company talk that you have specific number of stocks, you can email me and we can work things out. Now about Bodal Chemicals. Established in 1986, they produce dye intermediaries, dyestuffs and sulfur. Have multiple production units across Gujarat. Usage in multiple industries and sectors that they produce in consumption sector, in oil, in metals, and also in some of the sectors which are very close to the retail consumers, that is, you can say washing powders or liquids, soaps, etc. Market cap of the company is 900 crores. If you look at the financials of the company, then sales dipped appreciably by around 50 to 60%. Profit of 26 crores have become a loss of 19 crores. Debt has also increased year on year if I am looking at the numbers. Decent promoter and institutional holding, but nothing great that there is huge promoter and institutional holding, but it is quite decent. Return on equity of around 10% and operating profit margin of around 11%. If you look at the stock performance, then the stock has underperformed over the last 5 years. Really has done nothing. So it was at 70, went up to 200, came back to 90, 100 rupees just recently, and then has gone up again. There was China emission bans, and this was a big positive in 2016-17. The stock did go up for a few months, and it has retraced because the numbers have not been that great either. So it's not about the lockdown or shutdown of the industry completely that took place in the first quarter, but even before that, for the last 3 4 quarters, the numbers are nothing much to write home about. And also other companies in the same industry, other companies in the chemical sector are doing appreciably well with 20 to 30% profit growth year on year. Currently, it is trading at 15 times EPS, which doesn't look very expensive, but considering the kind of numbers that Bodal Chemicals is producing, I don't think it is very cheap either. Company needs to gain more market share and become better in terms of profitability and margins. As I said, numbers are not special. They need to come up with 15-20% at least profit growth going forward. See, it might be starting a bull run after such a lot of fall that we saw between Jan and March, that we could be headed upwards only in the stock, but then numbers have to support the stock price. If you look at the technicals of the stock, then there is strong support around the 55 to 60 regions. The short term support is around 70. The 200 DMA is around 62 rupees. So one can look at buying above 70 rupees, closer to 80, 85. Major up move is only expected above 90. And if you remember in 2016-17, the stock was more or less trading above 90 and closer to, and used to go ahead and go towards 160, 180 rupees. So 90 rupees is a strong resistance, and once that clears up, of course that should be you can say combined with the kind of numbers they'll produce, only then the stock would go up. But above 90 rupees, it looks like that the stock could perform really well. The valuations look attractive, but again I'm saying numbers have to support, otherwise PED rating might continue and the stock may continue to fall. So what needs to be done? I would avoid. I have mentioned a number of chemical companies that one can invest into apart from looking at something like Bodal or Kiri, etc. I think look at API companies, look at chemical companies which are more specifically producing for particular industry. Look at there are many companies which make reagents which exports to special clients abroad. There are a number of companies that I have talked about. There is a video of mine which talks about chemical sector per se only and exclusively on it, in which I have talked about 4 or 5 companies. You can look at it. Those are top class companies. Yes, slightly expensive, trading between 25 to 40 times, but they are growing also at around 18 to 25%, and that is why the PE re-rating has taken place. And if the growth run rate or on profitability continues in those stocks, then there's no reason why those stocks will continue to go up, and companies like Bodal Chemicals would sulk. If you have the stock, then keep a stop loss of 60 and just hold. Maybe in some time, in a year and a half time, it takes out 90, and then you could see 135, 140 on the stock, and may exit in profit. You may exit in profits or in very less losses. But most of all, apart from losing money in the stock, you'll be losing time. So there's a big chance that you'll lose, or you'll be having opportunity cost, and you lose out on many trades that are available in the consumption chemical and other pharmaceuticals, etc. sectors in other companies. So this was my video on Bodal Chemical. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.